What's up, everybody? Rob Wilson here, host of the Money Monday Show on Rob Wilson TV and founder of the March Money Madness Bracket Challenge. Back here again with your round 4 recap. And you know what? It was an interesting week for all of you guys playing March Money Madness because the market actually had its worst week of the year in round 4. And so while we'll get to the reasons for that in a few minutes, this week was all about which stocks could go down the least as opposed to which stocks could go up the most. We only had one stock still remaining in March Money Madness that was positive on the week. So on to the first matchup, number 2 LinkedIn versus number 12 Hewlett Packard. Hewlett Packard down a whopping 7.8% on the week, which allowed LinkedIn to take this victory as it was only down about 1.83%, which is roughly about what the NASDAQ was down, and NASDAQ is heavily concentrated in technology stocks like LinkedIn. So you might want to wonder why HP was down so much. Well, HP released a note saying that its chairman, Ray Lane, was stepping down this week after a weak support showing at the annual shareholder meeting, and investors seem to have reacted negatively to that. Also, Goldman Sachs downgraded the stock this week, saying that the demand for personal computers and enterprise hardware seems to be slowing, and all of this restructuring that they've been doing, which has allowed the stock to go up 56% year to date. All of that restructuring costs money, which may pressure profitability in the near term. So you saw the stock down 7.8% this week. On to the next matchup in the fourth round, number 6 American Express versus number 6 Aflac. Aflac down 4.8% this week, which allowed American Express to take home the victory, even though it was down 3.2%. So what's going on with Aflac? Well, I know a lot of you guys out there probably are familiar with the Aflac because you see the commercials with the funny duck on them, and you think that there's a lot of its business done in the United States. But what you probably don't know is that Aflac actually does the majority of its business in Japan. As a matter of fact, 75% of its sales come from Japan. So this week, the Bank of Japan came out with some news that said it was going to employ some strategies around economic stimulus. And what happens when you do that, it makes the value of your currency goes down. So if you're a company that does the majority of its business in the Japanese yen and that currency is going to be devalued, then your earnings aren't going to be worth as much in the future. And that's why you saw investors send Aflac down 4.8% this week. Now, you might also want to know, even though American Express won, why it was down 3.2%. Well, I talked about a little earlier about how the stock market had its worst week of the year over the last week. And a big part of that was the March jobs report that came out on Friday. And the Bureau of Labor Statistics stated that the United States economy added 88,000 jobs last month, but that was much less than analysts were hoping for and expecting. And even though the unemployment rate dropped to 7.6%, it really only dropped because you had almost 500,000 people stop looking for work. So neither of those numbers were what people were really looking for as far as jobs go. And if you're familiar with American Express, you know that they count on consumers using their cards in order to make money. So if people have less jobs, they're not going to be using their cars as much. That should hurt American Express earnings. And you may not know that American Express also lends money and provides small business loans. So again, as people have less jobs, they're not going to be taking out as many loans, and conversely, their earnings are going to be hurt in the future. And so you saw that stock down as well, even though down less than Aflac, so it was able to win this week. Consumer region, fourth round, CocaCola, number 11 versus 12 Cheesecake Factory. Cheesecake Factory down 2.4%, allowing Coca-Cola to take this one home almost down 1%. Again, basically what the whole entire market had done. The market was down about 1%. CocaCola down 0.91%. So what's going on with Cheesecake Factory here? Well, I think this is the same story with the jobs report that we talked about in the last matchup. With consumer discretionary stocks like this, especially stocks of restaurants where you're spending your hard-earned money to go out to eat, as the unemployment rate continues to be stagnant and people don't feel comfortable about their jobs and they aren't getting new and better jobs, you're going to be spending less money going out to eat, especially at somewhat pricier restaurants like Cheesecake Factory. So you saw that news hurt the restaurant stocks and Cheesecake Factory in particular this week. And in the industrial round last week, 3M, which was number 6 seed versus 12 Boeing, and 3M down 0.5% last week. Boeing takes this matchup. Again, the only stock up this week in March Money Madness was Boeing, up 0.37%. So not a lot, but hey, positive is positive. So what's going on with Boeing? Well, we've talked in previous weeks about the issues that Boeing was having with its batteries, and the FAA had grounded the 787 planes until they were able to figure out what was going on with the batteries. Well, this week they conducted a test flight with FAA officials on board the plane, and they reported that the test was fairly, there were no problems on the test, and they could begin flying the 787s perhaps as early as the end of the month. And in anticipation of being able to fly again, they also started packaging battery repair kits so that they could act quickly once they get the FAA go-ahead. They also announced a $1 billion order for a bunch of the 737s from a Russian airliner company. So all of those things, good news for Boeing. And you saw that even though the market was down, had its worst week of the year, it was able to eke out a small gain. So what are your key takeaways from this week? Well, you know, we talked about how bad the market was this week. Sometimes the market just takes everything down. So you could have a good stock with good news and good prospects in the future, but sometimes just the sentiment in the overall market will take every stock down along with it. Number two, you've really got to know how and where your company makes money. So, for example, if you own Hewlett-Packard and you realize that a lot of their money is made from computer hardware, laptops, servers, and you get a feeling that that market's going to go down in the future, that may cause you to sell the stock. If you know that Aflac does a lot of its business in Japan, and you hear bad news from Japan about the currency or about the economy, that may change your viewpoint on whether you want to buy, sell, or hold Aflac shares. And if you know that Cheesecake Factory makes a lot of its money in the United States, then you're going to want to worry about how the economy is doing in the United States, and that's going to affect your decision whether you want to buy, sell, or hold that stock. And lastly, we said this one last week as well, you got to pay attention to the economic data. You got to know when these data points are coming out. As we saw, the Bureau of Labor Statistics released the March jobs numbers last Friday. You have to pay attention to those numbers and ultimately form an opinion on how it's going to affect your stock. So don't forget to get your picks in this week. We're coming down the home stretch. It's the Final Four. 2 more weeks left to go. Hope you guys are enjoying it and learning a lot. Don't forget to get your picks in, and I will see you next week.